And good afternoon. Welcome into Market Talk for Thursday, April 29th. Great to have you here with us. I'm your host, Jesse Allen, and it's always a pleasure to have you here as we talk about the markets, and we got a lot to talk about today. You can find us online, markettalkag.com. That's our home on the web, markettalkag.com. Facebook, Twitter, Instagram, our social media links, our YouTube channel, all of our streaming sources, everything, one-stop shop, markettalkag.com. Well, another interesting day in the grain trade and more of a correction, although it was mainly in soybeans today. But we're going to talk about everything going on with the markets. Let's bring in our good friend John Heinberg with Total Farm Marketing. John, good afternoon. And we were chatting off air before we jumped on here today. Kind of a roller coaster ride, wondering, maybe get a little sick at times watching this market this week, just to bounce us back and forth. Today, not as much volatility, but still plenty of volatility to talk about.
Yeah, as we're getting to the end of the month here, a lot of things kind of getting squared away. First notice day for May contracts tomorrow. So we're seeing how that kind of plays out. Obviously, the May corn contract has been kind of the star of the show the last couple of weeks here, leading that market higher as some of these end users are trying to force delivery. Right now, I don't see anything registered for delivery, so we'll see how that kind of plays out. We lost limits on May now as we're getting in the delivery period, so that means this can trade on limitless. So that could bring a lot of volatility on top of what we've already seen. And then next week, we change our daily trading limits to 40 cents on corn and $1 on beans. So that really opens up the door for some real crazy times or real volatile days if this market wants to continue in this path. So, but it's been a long week, and then we got still another day to go. But just didn't know how we're going to feel every day. Going limit up, to limit down, back to limit up, back to nearly limit down yesterday. It was just quite the ride over the last handful of days here.
Definitely. Well, let's focus in. You mentioned, the May contracts trading limitless, and we saw that with soybean oil today, and that seemed to be the big pressure driver on soybeans in general. We saw beans down double digits, a lot of those old crop contracts, and even new crop was weaker. But bean oil down 296 points today, 65.99 on that May contract. So kind of honing in on the soybean market, what are you seeing here as we get to the end of the month?
Well, if we got a lot of length in these markets, and especially here in the front end, as we saw these markets really bid up over the last couple of weeks. So, with first notice day being tomorrow, anybody who's long those contracts needs to be out or risk delivery. And so, in the corn market, they want that delivery, but in these other grains, that is not what they're looking for. So they're probably seeing that liquidation heavily making that push on, obviously, from month bean contracts as well as the bean oil prices today. We still got to watch what's going on globally with edible oils. Maybe we got a little bit of just a blip on the radar where things might be getting caught up a little, but that still is a very, very strong demand market overall. But to me, I just attribute the weakness we saw in that contract today to first notice day in the end of the month here coming tomorrow.
Well, and we look as well, you talk about the global factors, and we look at supply and demand. Obviously, we know beans are really tight. Looking at weekly exports, I know soybean side was, I'd say, bullish at least. Talk about what we saw with weekly exports for soybeans today.
Weekly exports, anything we sell on the old crop side as well as shipments continues to be friendly given the tight supply picture. I'm keeping an eye on what's happening with the new marketing year, the 21-22 sales. We're at over 6 million metric tons already. Now China and unknown destinations is tagged for 82% of those sales for the new crop that we haven't even put in the ground or are starting to put in the ground, well above where we were last year and near multi-year highs in terms of this time frame. So again, we're still seeing that demand build into the next crop year. Just anticipation that demand will stay there for U.S. beans. So again, just keeps putting pressure on us to get this crop together and actually have a decent number put in terms of yield and production this coming summer, especially with those acres where they are now. The market's anticipating those acres going higher. And now with this nice weather, and that's been some of the weakness we've seen in the new crop this week, is just forecasts are looking pretty friendly. Guys are rolling. We'll see planting progress pick up a little bit here, obviously. Then we got to sit back and see what the weather gives us in terms of some moisture. Talking to producers, it's a little concerning in some areas what they're trying to plan into. They're hoping to get the seed in the ground and get some moisture to get it to grow, but we'll see how that plays out.
Well, since you brought up weather, I want to pull up the drought monitor for this week real quick on the screen. And you mentioned some of those areas where we're starting to hear concerns. And, especially you look at the Dakotas and the Northern Plains, we've known that situation. But even some parts, you look here across Northern Iowa, areas of that's even expanded a little bit here this week. And we see a bulk of this rain kind of shifting from Texas up through the eastern Corn Belt to up into the Northeast here this week. But we look at this map, and I would think that the drought monitor seems to correlate pretty much with the areas of concern that you are hearing and that I'm hearing from farmers in the U.S.
Yeah, I did notice that growth across northern Iowa, here into south central Wisconsin, and eastern Illinois. Now, eastern Illinois probably picked up some decent moisture, in some portions today. At least it looked like as the rains were working through. But the biggest thing we keep hearing too from talking to producers, especially west of us here in Wisconsin, is the subsoil moisture is not there. And even though they're getting a little bit of moisture here now, the deep down moisture is not in the soil this year. And that's going to be a concerning point because that basically means we're going to be needing timely rainfalls the entire growing season, unless for some reason we just get a couple wet weeks to replenish that stockpile. But usually takes a little longer than that to occur. So it's going to be one of those summers, if the temperatures stay warm, which the forecasts are kind of leaning to right now, we're going to need to see rainfall on a timely basis, or we will start seeing some crop stress, show up from time to time. And that overall is just not going to be the recipe we need for a big crop.
Let's look over at the corn market, and we mentioned looking at the corn market here. And yesterday we saw quite a bit of bull spreading in all these markets before a late collapse. Today it looked like maybe a little bit of that bull spreading came back. You alluded to it that maybe they want to take some delivery on some of these old crop corn contracts, and May corn back above $7 on the board here at the close today. What is the differences you're seeing in corn compared to what we just talked about in soybeans?
Well, corn right now, too, is also about the domestic market. We've made the shift over from May to July contracts. We're seeing basis levels really improve out there as, again, the market is looking for supply. Some of that's just because of the direct competition with the export market. Weekly inspections again today or export numbers today on the report are about 1.9 million metric tons. So that continues to stay at a strong pace, and those bushels leaving the country. And then you're looking at ethanol trying to fire up, the feed usage side, obviously here in the United States, looking for supplies, and they can't get it from the producer. So they're going to the board and going to try to force that delivery. And that's why we've seen that explosion in the May, now over the July. We're trading at a, basically a 40 to 50 cent premium over top of that contract from May to July. Now, what's that lead us going forward? If we don't start seeing those deliveries, I would expect that May strength to move into the July market as well and possibly go right back up and retest those highs that we put together earlier this week.
Now, I've fielded this question and I've asked it here pretty much all week, and I'll ask it of you as well. I'd love your opinion on it. I'm hearing more from farmers across the countryside that as we look at the new crop supplies, there's a lot of guys who are getting a little more concerned about marketing too much new crop right now. I'm sure you've been getting that question as well. What do you say to that as far as, how much is too much to market on the new crop side right now with whatever it may be, corn, beans, wheat, whatever we're talking?
Yeah, that's a big question right now because in front of you, you got good prices. I know I fielded this question a couple times today. Guys are looking at $5 corn and getting some sales built for 2021. It's a heck of a starting point. And as I've said to them, I'd be foolish to say don't sell at that profitable level, but there's a lot of unknowns still going forward. And everybody's seen how explosive this market has been, over this past year. So what do we need to do? It's all about balance. If you want to stay in the field or leave the corn in the field, don't put it on the board and market it up at this time frame. Find some put strategy, at least keep some type of floor underneath if you're moving it out there to build that base. Again, calls got a little elevated this week with the volatility. At least today things seem like they're settling down, and that might help out that regard. But again, you keep those what if scenario calls out there, and over time, again, you still put a pretty good floor together and be happy with those sales because this is something we haven't seen here in a handful of years. That's still where I'm at. I like those long range out of the money calls. We don't put a lot of risk into them. Keep them around 20 cents or less. I know there's strike levels that are prices we haven't seen since 2012, but we've moved that quickly. And if we do see any weather, we'll be in those levels, $7 type calls, 650 type calls for new crop corn. So that's what I've been working with for producers. We're getting to a certain percentage point. A lot of them too are also very concerned about the weather. They want to over market, and in that case have extra bushels tied up that we don't have. So it's all about balance, and just kind of ask yourself, what's the biggest risk and how can I shift that risk? Because in a market like this, every time we run up, we add another 10, 20 cents to it, like we've seen this week. It just adds the amount of risk that we have on the downside. And we saw how quickly things spun around this week, taking some premium out.
And I think that's the biggest thing I'm hearing with that question is not wanting to overmarket due to weather concerns. I think that's a lot of the big focus behind that train of thought right now. In that wheat market, real briefly, Chicago, Minneapolis wheat did well today, but KC wheat ended up finishing pretty quiet, right around the unchanged mark, a little weaker. And I would have to think that probably has to do with the weather patterns as we're seeing more rain in that winter wheat belt right now.
Exactly, that's what it is. We got a little bit more rain forecasted for that Southern Plains, so that put a little more pressure on that winter wheat crop. Northern Plains, even though there is a little bit more uptick in terms of some of the precip levels that could be coming through, it doesn't feel like it's going to be enough to really make an impact. Plus we're watching what's happening in the Canadian prairies and their wheat acreage as well, which was a little bit softer than last year. So that spring wheat really got a little push on that today, and that market actually looks like it's got some strength in it, especially if the moisture does not materialize up across those northern plains. On that drought monitor map you showed, North Dakota's drought intensified and grew a little bit more again this week. Just again, adding more concern to that spring wheat crop as we're trying to get that in the ground. Then we're obviously with wheat, we got to watch the global scale. Now, with some talk a little bit here late this afternoon, we got some heavy rains moving through the Black Sea region that could slow down some planting pace as well as do some damage to some of the crops in terms of excess moisture. So that's something I'll have to keep an eye on too, because this market really likes to react very quickly when we start seeing production issues, especially in that region of the world. They may be short-lived, but the technical side of this market is still very strong. We had a little bit of a pullback this week. Don't be surprised we see some bid really move back into that wheat market, especially if the demand stays relatively good and, go challenge levels that we haven't seen in a handful of years.
Let's flip over to livestock, John. The hog market starting to kind of hit some resistance levels. We've been kind of sideways to choppy here for a little bit now in this 100 to 110 range. And at the top end of that, we're starting to hit kind of that ceiling there, that next little ceiling in front of us. And we were down triple digits today in a lot of those contracts. So what is your take on the hog market? Are we running out of steam as far as the top, or is it just a correction before we run this thing higher again?
I think that's a little bit of where we're at right now. Just running out a little bit of steam, maybe a little bit of caution coming into the market. We're starting to see packer margins starting to turn a little bit negative here. Obviously, retail carcasses are still strong, but they have been mostly softer this week until this afternoon at midday. Then something happened the day we haven't seen since early February, and that was a lean hog index actually ticked lower for the first time since early February, and actually only the fifth time this year that we've seen the lean hog index put a negative number on. Now, I think that's more of a short-term trend than anything that, we just find some footing and we're off and running again when you start comparing the variables that go into play in the cash hog market and that lean hog index. But it's enough, with the May contract, even though it's not very actively traded, still running at a bit of a premium over top that index. Maybe it was just a day that the buyers stepped aside. We bought in yesterday extremely heavy going into the export sales numbers today, which were very supportive. I mean, 35,000 on sales is a good number. Market year high on shipments at 58,000 metric tons. So those things are still being very, very, active and very supportive. Market maybe was a little disappointed that China only picked up a couple thousand tons this week. So they're actually number 4 or 5 on the list in terms of buyers. So, so it's just one of those things that felt like a breathtaking type of day after a couple good days. Maybe we're working a little bit sideways. We're still higher on the week. I think tomorrow, how things trade tomorrow will be very, very key going into next week. Watch those retail carcass values. If they hold their gains today, we're up $4 at midday. We stay strong going into the close here this afternoon, and that'll probably give us some fuel to move these prices back higher. And we put new contract highs in on July and further contracts yesterday. June feels like it's about ready to pop back up and take that high out. So I think all it needs is one good shot of news, and we're up and running again. The hog supply numbers are still tight, and the demand is still strong.
Looking on the cattle side, we were mostly higher across the board there today. It looked like feeder cattle and live cattle, feedlot country trading about $1 lower this week, which is still disappointing, but nice to see cattle finally take advantage of some mixed action in corn here to try and put something back on this cattle market, which is just taking it on the chin lately.
Yeah, the biggest thing going on in the cattle market right now is slaughter numbers. Last week we estimated about 523,000 head got slaughtered. That was actually the largest week for the year. So that just tells you how many cattle are coming through. Some of that's probably a product of high grain prices. As you know, we got these cattle on feed, and all of a sudden now you're buying $6.50, $7 corn, putting that through them just doesn't pencil. So if these cattle are close, they're moving them. And the Packers got all the leverage in that regard, even with the carcass values trading at $290 a choice carcass, which, with the exception of last year's, COVID-aided high, is the highest prices all time. So right now the leverage is in the Packers' hands. If the cattle are coming at them, they don't really have the need to bid up. So that's what's kind of happening there. Technically, we've just kind of hit a bit of a stagnant point here. We're consolidating. Watching June's now traded 116, 6-7 days in a row. We have a pretty significant low on the charts from back on the 26th, just a couple days ago. It's kind of holding underneath all these contracts. I think as long as we can kind of hold above that level and don't break through, maybe we can find some footing and climb higher. But I'm a little cautious right now. I'd say a little bit more on the defensive side just because of the technical picture and the money flow side, because that cash market just can't seem to lift this market higher regardless of the retail values.
John, any other final thoughts you have for us today? Anything else you want to mention?
There's going to be a lot of things happening here. Obviously, we got to really keep an eye on planting pace, what's going to happen with that market and how that pushes into those new crop contracts. This volatility is just heating up, like I mentioned before, in the grains. Expanded daily trading limits starting next week. The funds have room to push this market, especially soybeans, especially wheat higher. And realistically, the dollar value of their corn position, even though it's a lot of positions, still has got some room to go. So it's going to be a wild couple of weeks here until this May contract comes off. I want to see how the deliveries go there and what happens. We might see some pretty explosive days on that May contract. And then how's that handle as the July contract comes on as the lead month here in a couple of weeks. So, if you thought this week was volatile, it could be just the beginning of what we're going to see all summer. And it's going to be a very hypersensitive market because of what's going on globally as well as here. We didn't even touch on Brazil weather today and their issues. So, stay tuned to the headlines and stay disciplined to your targets.
And if folks need some help in staying disciplined and kind of, navigating these volatile waters, they could do that by reaching out to you and the team at Total Farm Marketing, can't they?
Yes, I can. Love to chat with them anytime. Give me a call, 800-334-9779, or shoot me an email, johnh@totalfarmmarketing.com. And again, we got our website, totalfarmmarketing.com. Again, you'll see the brokers, our information there, as well as we got webinars, market news, weather news. Take a look at things and, go ahead and take a peek at one of the webinars and sign up for free.
Totalfarmmarketing.com. John Heinberg, appreciate the time as always. Have a great rest of your weekend, and we'll talk to you next week.
Sounds great. Thanks for your time and have a great week.
John Heinberg with Total Farm Marketing, our guest today here on Market Talk. Find us online, markettalkag.com. This has been the Thursday, April 29th edition of the show. I'm Jesse Allen. Have a great afternoon.